What's up, guys? How we doing? FOMC, 2 o'clock. Yeah, I'm all in. I'm all in. But I won't tell you which direction I'm all in on. I'm just all in. Just know that. I'm just kidding. Market did what we expected today. Market did what we expected today. Pullback, gap fill, back to our demand. QQQ close. Previous day highs. Was it exactly? Oh shit! Was it exactly previous day high? It was, wasn't it? Yeah, perfect. Perfect. Previous day high? Yeah, on the dot. Look at that. PDH on the dot. Love it. SPY, gap fill. Where'd we close? We're a little bit on. Yeah, we went a little bit north, a little bit south of it on SPY, but QQQ, perfect PDH. Nasdaq, perfect PDH. ES, a little bit south. So yeah, very nice. Just a nice slow grind to fill the gap to start the day. That's sort of what we planned this morning, wasn't it? 2 o'clock. We got 3 minutes until the press release comes out, and then of course we got Powell at 2:30. We'll be here for about a half an hour. I won't be here much longer than 2:30, maybe 2:45 at the latest. Today traded MU. Really nice trade. 422.70 was our key level this morning. If you paid attention on the live stream, had a beautiful little break and retest right there. 422.70. You can bring that in. So a nice trade. Took that at had 500% gain on STX YOLOs. That was nice. 500% gain on STX YOLOs yesterday. Yesterday into today. Beautiful. Loved it. Yeah, today, MU 935 entry, which was right here. Sold into these pops. Very nice $2,000 gain for the day. So good day. Really haven't done anything since. I got myself a few earnings plays because why not? And that's it. Take it easy. Walk away with profit on the day. Guaranteed profit on the day is a good place to be. I'm very curious to see what silver and gold do here. This is probably the most interesting thing to watch, in my opinion, is what does silver and gold do on this news. This is probably all I really care about. Silver and gold. Very intrigued by this move. I'm curious. You got yourself this trend that's been holding. I'm curious to see if silver gets under 100 here. All right, so 2 o'clock has hit. Let's see what the breaking news is. I'm assuming rates unchanged. Nothing yet. I don't have a Bloomberg terminal, so that's unfortunate. If you guys got the breaking news, let me know. No change. Okay, so Fed holds rates at 3.5 to 3 3/4 on a 10-2 vote, with Moran and Waller dissenting for a quarter basis point cut. Says inflation still somewhat elevated, economy expanding at solid pace, job gains low with unemployment showing signs of stabilizing. Okay. So I think no cut is status quo, and let's continue the tech rally, and let's continue the absolute crazy MU. I mean, I think at that point it just goes on to the earnings. So yeah, I don't expect this to be that big of an event, but it's FOMC. We have a reason to be on a live stream, so why not? We can listen to Jerome Powell live together, and that's about it. Where is gap fill on NASDAQ? Let's see. Gap fill, full gap fill on NASDAQ is full gap fill on NASDAQ, on QQQ at least, is right here. 631.13. 631.13 is full gap fill on QQQ. So maybe that is where you're headed. Right here. 631.13. That could be what you're looking for. Yeah, this is all nonsense. It's all pointless. This move has not been big enough to make me think that it's the real move yet. If there even is a move. And especially the retest of this. I think even if you come back to this level, this could be great. You are holding 694. Yeah. So 694. Okay. That's going to be big. 69.94 ES was another level we had today. Yeah, I would say if you break under this 94 spot, you could get a little bit more slippage right here. Except you do have this previous day low sitting here. That's a little. That right there is where you get manhandled. Yep, that's the manhandle right there. Be careful of this low. Yeah, I'd be careful of that low right here. 69.88.25 to 69.94. Yep, there. This is where a lot of games are going to get played right here. Couple sweeps in here maybe. I like that spot. This is a really nice rejection now. Look at this. Rejection, support, rejection. So that's clean. The downside, the move for the downside today was actually really nice. I'll show you where that's set up. Take a look at this. This was actually a really nice trade today. So you had these pre-market lows here, right? At 7,022. And then if you zoom in, take a look at this intraday break and retest today. Actually a nice trade in terms of the overall market for the gap fill look. You had a very nice pre-market low here at 7,022. You held that on the intraday today. You got a beautiful break, retest, previous lows into rejections, bear flag. That was really the best trade of the day on the overall market. So if you traded the overall market today, if you traded ES futures or SPY, I think if you caught that trade, I think you caught the best trade of the day, hands down. That's a pretty one. I mean, even look at the candle at that level. Look at this candle. Very nice. Little bear flag. Little break and retest, bear flag. That's it. Break and retest, bear. The burf. The Electric Avenue, yes. That's the Electric Avenue. Why don't you come to Electric Avenue? Yeah, that's nice. Look at that little play. Very clean. So, GG's on that one. Okay, so here's your games. There's your demand zone. 69.88, 69.94. Going to be a lot of shit going on down there. SPY 694 target. Hit. Very nice. If you fail below 694, and I would say, we got to adjust this a little bit, actually. Let's do some adjusting. We got some adjusting to do. We got to include this previous day low. Yep. Okay. Doing some adjusting here. This is actually helpful, so I don't have to do it tomorrow. This is the type of adjustment that is important for you to be doing. So we're adjusting here because you have a previous day low, you have that low, you have this high. This is definitely the area that's going to try to hold. you now have Tuesday's highs that could become a failure point, which actually was a very nice failure point today. This Tesla dump is going to be the best trade of the day. Okay. Well, I mean, sure. If you got a magic ball that I don't have, then congratulations. Congratulations. GG is good game. It's like a slap on the ass. Just think about GG as a slap on the ass for doing a good job. Okay. Well, we don't have much to talk about until 2:30. I would be very intrigued by SLV and gold today. I would definitely keep an eye on this because I think the backside of this trade is going to be very advantageous. I hope that it comes soon. I would love to trade this move if it eventually happens. Under 100 on SLV could be interesting today. GC, pretty relentless. And really, there's really no inclination to look for downside on this one, which is just insane. So that's not too interesting. But this silver sort of uptrend that to me feels like it's going to tire out at some point is something to be watching. Money-wise? Yeah, money-wise. The dollar had a strong move today from some comments from Vincent. Not really sure what the hell he's talking about, but yeah, dollar was strong, which caused a little midday gold drop. I don't know if you guys saw that. You saw a little panic attack on gold midday. It was right here. Nice little panic attack at around 10 o'clock. That entire thing got bid back up. So again, relentless. STX, nuts, earnings, memory. This sector is still just absolutely insane. Bought this yesterday as a YOLO 460s. They were up 500, almost 1,000% today. So this sector is still insane. SNDK is earnings tomorrow. This is going to be very important for STX and MU. MU looks fantastic again. MU's just holding up. MU's just not giving up. Like even today. Just holding. ASTS was probably the best trade of the day from the live stream. If you guys did come to the morning live stream, we talked about ASTS over 113. This was something we were very locked in on. A lot of you guys from the group today traded that. In the mentorship group, caught this ASTS long. This was a great long, very, very structured. Friday lows, Monday highs, very clean 113 level right here. And we got a perfect, and I mean perfect, 1 minute inverse head and shoulder off 113 this morning. Take a look at this. Look at that little thing right there. Here's market open. You have your 113 hold. You have your 113 trap. You have your 113 hold. And that right there, my friends, is an inverse head and shoulder. Right off our key level. Bam, 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 right? Left shoulder, head, right shoulder. And from there, the 113 level created a awesome long up into the 120 target. That was really nice. Again, I talked about this on the live stream this morning. This is a fantastic daily chart on ASTS. It really is. I would still be focused on ASTS. This should be a trade that you look at every day. I mean, this is just a stock, something that we're going to talk about tomorrow. Make sure to come to the webinar tomorrow. Make sure to put your name on the list tomorrow. And by the way, just so you guys know, just full transparency, 1,000 people is the max that can join, okay? If it's any more than 1,000 people, I have to pay $4,000 a month for Zoom. And again, this is why I think Zoom should be a more expensive stock because the Zoom prices are oh shit, Zoom's going up again today. Zoom prices are out of control. Purely out of control. the price to host those webinars is not cheap. Just a quick FYI, and I'm not BSing you. You can look this up publicly if you want. Just go to Zoom, try to buy webinar, and see. Try to buy webinars for 3,000 people. Go see how much it is. Zoom, actually a very good stock, and it's sort of something I want to start buying some shares of. But we have about 1,700 people that have put their name on the list, and there's only 1,000 slots. So if you want to come tomorrow, I recommend being there and showing up early. So just know that, okay? The link is right below. Insiders free webinar. See this right here? It's right there. So yeah, thanks for signing up. It's gonna be fun. I'm excited. This was a retest that I was looking for on Zoom, and it looks like I may have missed it. Yeah, I think I may have missed this. This looks great. The link is down in the description below. Microsoft, very intrigued on earnings today. I got myself a few YOLOs here for today. Just loving the Microsoft weekly chart. Want to be a part of this. I want to have something on the line. Love this weekly chart. Love the break. Love the retest. Love the technical reason to be long. And if the catalyst is earnings, then let the catalyst be earnings. But technically, love the reason to be long Microsoft on the bigger picture. So I really like that. Meta, another one on the weekly chart. Beautiful double bottom low on Meta. Beautiful little double bottom on that 603 pivot. That's the weekly pivot. Meta has some work to do. Meta's got to squeeze through the 200 and 100. But what better time to do that on some earnings? But again, I have $2,000 in realized gains, right? And I have a total of, this is my open risk right here. So that's $1,079 if these go to zero. If these go to zero, I lose less than I am up, half of what I'm up on the day. So very, very much not a massive trade, just a little taste. Maybe they can turn into something special. But status quo, nothing crazy. Make sure we stay green. Make sure we stay green. Yep, started with 100K this year. We're up to 130K. So a nice 30% return so far this month. So far, so good. And, you know, all you have to do is go like this, right? Ask your Discord member, ask the person that runs your Discord community if they could do this for you. So we'll go like this, and we'll go like that, and then we'll go like this, and then that, and then we'll go like this, then we'll go like this, and that, and this, and there, this, there, that. Then we'll go like this, and we'll scroll down. So after today, it's going to be roughly 26,000. So right around 26% on the month. So very good month. Nice and slow. Little days. No big days. Nice and easy. Couple $1,000 days here and there. I'm already getting the messages from people. The Timmys and Jimmys. Why is Desi trading such small size? Why is he only making $1,000 a day? And it all adds up. It all adds up. Get loose out of the chat. Get him out. Why is this not on? Hold on. Let me change this. we go. Now we're good. Idiot. $6.94 just sitting there. We got 15 minutes. Get them out. I don't got time for it. Not on a 2 o'clock on YouTube for free. I don't got it. Don't have it. There we go. Sorry about that. Yeah, ASTS is nice. What is that holding above right now? That's holding above. Yeah, that's really nice, guys. ASTS is holding right above Tuesdays, Thursdays highs. Look at that. Here, 119.90, 120. Look at that little retest. Little clean. Clean. Very clean. Tempted to just, it's just, I'm not going to do it this time. I'm not doing it. This is classic beginner. It just, I just know how these days end, right? You know exactly how these days end. You start getting a little antsy later day. You start throwing in some stupid trades. Start trying some, aggressive entries around 2 o'clock. Everything starts to fall to shit. You give back all your gains on the day. And there it goes, right? There it all goes. Just not interested. Hopefully tomorrow it sets up. ASTS in Rocket Lab. Let's take a look at Rocket Lab. Nice hold. Yeah, it's a nice hold, man. Definitely another one to be watching. Look at that. That's perfect, Rob. Highs, lows. It's really clean. That's a nice ED spot. We've had this on our charts for some time, it seems like. Yeah. Matter of time, it looks like, right? Daily 20. Yeah. To me, that looks like only a matter of time. You need the next catalyst. Need the next juice. Yeah, Coinbase SD. Definitely something you should keep watching. You've been right about this. The gap fill long, that could set up. The gap fill reversal. You got to get back over the 214.13 spot. The gap level. Let me see what that's been doing there. Yeah, I mean, look at what it did this morning at our level at 214.13. So, total smackdown there today. So, you definitely need this, right? You need it to flip. Need it to flip. All right, we're almost there. I'm counting down the seconds. S&P 500, just sitting here. Non-event, SPY, nothing. Meta holding, Microsoft sort of pushing higher. ASTS, what's MU up to? SNDK, STX, still strong today. What did Amazon do today? Amazon gave us a pullback, so that's good. We needed that pullback on Amazon. Yeah, I like this pullback on Amazon. I think that's the best look. Let me take this stupid shit off the charts. Yeah, that's your spot right there. 240.65. That's a beauty. Good pullback today. Great pullback. This is what you want. You don't want this to go like this, and then this, and then this. You want it to do this, and then this. And then you get a new opportunity, right? So that could be something on watch. Google. Nice little pullback to this structure here. That could be pretty interesting. Yeah, I just love this meta structure, man. And I want to pick it up off these lows. Just look at this beauty. It's just so good. I hope this thing squeezes, man. I really do. There's been a lot of bullish stuff going on for Meta. I mean, I don't know how Meta doesn't, I don't know. Maybe I'm just blinded by Meta. But I love the gap fill potential. I love the potential of this gap filling. That's fantastic. That's very advantageous to me. I love the structure lately. I love the strength that we've seen off this low. This has been a very strong move for Meta. Seems to be having a real driving, something's driving it. Would love to see that structure hold tight. Maybe you got to dip on earnings and get bought back up again. That's possible. But, yeah, I love the Meta look. Tesla couldn't break 438 today. Yeah, look at that. Oh, man. Rob, what a fade of that spot. Oof. That was right. That we had that. 438.20. Holy crap. Man, sometimes the levels just shock me. Like, even I'm shocked at how you just look back at some levels you had and you're like, what the hell? Look at our analysis this morning. This was this morning. 438.20. That was this rejection level we were looking at. Look at the high of day. 438.26. I'll do better next time. 6 cents off. We'll do better next time. We'll get it dialed in. We'll get it dialed in. Don't worry. Yeah, what a beautiful fade. Options are so expensive. It's because of the implied volatility. So options are priced with a few different things. They're priced with extrinsic, intrinsic value, And part of that equation is implied volatility. So that's basically time value is intrinsic. Actually, I always get these two mixed up. I believe I'm right. No, okay. Extrinsic. So your extrinsic is your time value, right? So you have extrinsic value, which is time, and implied volatility. So you have extrinsic value, right, which is E, and intrinsic value, which is like what it's actually worth. So this equation is time and IV. And then this equation is just the strike price minus the stock price. So let's say you took a Tesla. Let's say you took a Tesla 430 call, right? So your strike price, the current price is 434, right? And your strike is 430. So at a minimum, if there was no extrinsic value into that option premium, at a minimum, your option premium would be $4, right? At a minimum. Now you have to add the extrinsic value. So you add time. So let's say there's 2 months of time. Let's just say you add another $3 of premium because of the time. And then you have to add the implied volatility, which could add another, who knows, let's just call it $2. So your premium is now $9, right? 4 of it is actually what it's worth. And then 5 of it is just because of time and IV. Right? Does that make sense? So when you buy a contract that has high IV, you're basically just buying an inflated option premium. Something to understand when it comes to, you just want to understand how the calculation works. You don't really need to it's not that important. You just need to know that if high IV, then more expensive and inflated and maybe not a good buy. Sort of some things to know. All right, where's Powell? Get him on, please, so I can go play some Arc Raiders. Maybe we do this. Let's do here he comes. Market tanks before it even comes out. Oh, IWM's going down. Damn, IWM has that big gap below.
Good afternoon. My colleagues and I remain squarely focused
Can
on
you hear that?
Our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated.
Great, thanks.
In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments.
Oh, great, thanks.
Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures.
315 lights.
Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
I don't usually last very long through these talks.
At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. Since last September, we've lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We're well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Oh, no. I didn't mean to do that.
At Associated Press, thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is
profitable trader.
perhaps
Okay?
the most important
It's important to
legal
understand what's
case
going on.
in the Fed's
But it
113-year
is so
history.
disconnected from
And
what
as I thought about it, I thought
we
it
do
might be hard to explain
and
why I
the
didn't
important
attend.
stuff.
In addition,
But it's
Paul
important.
Volcker went to a
understand.
Supreme Court case famously in, I guess, 1985 or
And
so.
being aligned with
So
the
it's
economy
precedented,
all
and
that.
I thought it was an appropriate thing, and I did it.
Great. And then just
But
quickly
these
follow
political
on
questions,
the job market.
what a waste of time.
You mentioned last month
Who
that
cares?
the household survey might be distorted,
What a waste.
and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized?
Get this guy
Thank you.
off the
So,
stage.
yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown.
What a terrible
However
start.
big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there,
Where's
but it's a
Steve
tweak
Leeson?
here and there. The reason
Where is he?
why we changed
There he
the
is.
statement,
Look at him.
let me pull it out, was simply, it used to say that judges that downside risks to employment rose in recent months. So we saw, data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling.
I thought you had
And
sort of-
so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Yeah, I'll change the mic closer to me.
Nick Timbers, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today I'm simply going to refer you to the statement that I made on.
It starts to become like one long word that I can't decipher between. It's just one singular word that's continuous. And it starts to just all become nothing. Why? I didn't watch this to talk about politics.
Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today. That either.
They're
why would
wasting
you,
our time, man.
Want to leave it all under the circumstances?
Again, I don't want to get into it. It's not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the US currency lower?
All right.
And have you been at all
Good question.
concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So, I have nothing for you.
What's your view on the market movements? What do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Speculate wildly. Please. Come on, give us something.
SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market
I
and the
like
statement,
that.
should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, First of all, if you look at the incoming data since the last meeting,
All right, the first real question of the
clear
meeting.
improvement in the outlook for growth. The data have come in, and sentiment, the beige book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting, we're evidence of stabilization. So it's overall.
Is it
a
juiced
stronger
up down there,
forecast.
Knowledge?
It really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing.
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data implications and the outlook and the balance of risks. Haven't made any decisions about future meetings.
That low just keeps holding.
The economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve Leisman, CNBC. And
There he
Steve,
is.
Questions you might answer. Thank you.
What did he say?
You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the S&P and the longer run rate, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. And maybe I missed by 1, and I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates.
I'm starting to regret this idea.
Range, but so for some people, they think it's neutral.
Every time I do this, I'm reminded why I don't
my
do
colleagues
this.
think it's hard to look at the incoming data.
I don't even know
and
why
say
I
the
showed up at
policy's
2 o'clock.
significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course, no one knows with any precision. As a follow up,
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah,
That's a good question.
I would say if you look at the S&P from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, the Fed funds is running just a little below 3.65%. So you
MU,
move a good
man.
way.
Nuts.
And we think we're
Yeah,
well positioned
Chef,
here
insane,
to
dude.
watch how the economy performs, look at the data.
What a
We're
stock.
not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira. Thank you, Chair Powell. Amira Mokwe from
Incredible.
Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people
All right.
did want to cut and dissented, but committee pretty broadly for holding today.
I was hoping for something to happen on the charts,
A test for when to
but
cut at the next meeting. What we're saying is we're well positioned as we make decisions.
I think this is all just wasting all of our time, to be honest. I appreciate you guys stopping by, but we're basically just wasting our time, to be quite honest.
We still have some tension between employment and inflation, but it's less than it was.
I mean, it's all just, let's see what
The downside risks are probably
Microsoft, Meta, and Tesla do. Let's see what Apple does.
about how you weigh.
Let's see what the big tech earnings have to say. That's really the driver here. This is pointless. Market's not going to move off this.
We'll find our way forward as the data.
Key demand's holding. Strong stocks are staying strong.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business.
Status quo for now.
Some tariffs already moved through the economy on prices.
A lot of it has. So basically, there are many different estimates.
Make sure to go watch this if you want. But for me, this is irrelevant. I'm not going to take a trade based off of this action here. And there's nothing that was said that makes me think that anything changes. I don't even know if I mean, even if we go straight up, I wouldn't trust that because of earnings. And if we went straight down, I wouldn't trust that because of earnings, right? Like if we go straight up here and then Meta reports terrible earnings, we're coming right back down. If we go straight down and Meta and Microsoft report 2x earnings and raise guidance by double, we're going right back up. So anything that happens here is, to me, completely irrelevant. I would not trust anything you see. It will not be based off of a driver like Microsoft, Meta, and Tesla earnings, which are much larger drivers than a status quo, no rate change, nothing is changing FOMC meeting. So, yeah, that's going to be it, guys. That's my stance. Wait for earnings. Let's get the hell out of here. Let's enjoy the rest of our day. Let's get off the charts. Clean up, or not clean up. What was I going to say? So why did I say clean? I saw the word clean. Oh, read. Okay. Webinar tomorrow. Look forward to seeing you guys there. Should be fun. Oh, this is the wrong mic. Okay, this is the mic this time. I got different mics for every scene. Hope to see you guys there tomorrow. Obviously, you guys are in the group. I'll see you tomorrow on live trading tomorrow. That'll be very nice, very fun, very exciting. Hopefully some action after these earnings. Thanks for showing up. Press that like button. Subscribe. Not sure we'll do this again, but maybe if there's some more anticipation in the future. But I mean, everything looks good, right? Like let me end with this. Everything looks the same, which is bullish to me, right? So everything the same is bullish because look where you're holding. You're holding exactly in our demand zone. So I would not look to short this move. Our SPY zone, our 694 target from this morning on the live stream is absolutely on the damn dot, actually, now that we're starting to get a little push. So, very good. Here you go. All right, look at today. Pullbacks between 694, 696 are likely the best entries. So 694, 696 was our zone on the SPY, and you can see this 694 was the spot. That was sort of the big zone we were watching today, this whole area between 694, 696. We've basically been sitting in this zone all afternoon. And if we can continue to build out of this zone and squeeze, that's good stuff. So we'll see. Pullback zone has been hit. Now it's a matter of if the buyers step up, right? That's it. All right, guys, have a fantastic